Let's switch to asset-backed lending. What's behind the growth? John Sheffield from MA Financial joining me now to discuss. What is behind this growth, John?
Thank you, Juliet. It's an interesting question because what we're seeing at the moment, for example, around private credit, everyone's saying, wow, private credit's come from nowhere. The reality is that it's been around a long time. Just the macro environment and defensiveness and the ageing of the population from accumulation towards retirement means that there's better investment products out there. Asset-backed lending is a big and growing part of the private credit market, and asset-backed lending in our language is really where consumers or businesses seek finance for different purposes. It might be a mortgage, it might be a car loan, it could be supply chain finance or other specialty style finance. So it's been around for a long while. It's just being more readily understood in the market now.
Okay, so readily understood, but what sort of trends are you seeing in terms of people inquiring about this and getting into this space?
Yeah, so the big mega trends that have been occurring since the global financial crisis, and this is really where banks started to pull back from things like asset-backed finance, asset-backed lending. They haven't exited by any means. They still participate, but participate in a lesser way and in lesser categories. And what I mean by that is that private credit fills a gap where banks either can't or won't because of capital treatment or regulatory rules. And therefore non-bank lenders have been able to come into this space and fill that gap. Why non-bank lenders? One, they're not regulated by the prudential regulator. Mm-hmm. Two, they operate in an environment where they tap both private markets, so warehouse financing, you might have heard that term before, and also participate in public debt markets. Private credit can participate in both the public and private side of being financing the non-bank lenders. But the non-bank lenders are also nimble. They adopt technology fast. They're at the pointy end of where things go wrong, they lose their money. So they're the ones who are really thinking about how do they manage their risk carefully. And also the innovation around product and technology means that they can adapt fast. If you think about a bank, for example, if a bank wanted to go into a new lending category that they haven't done before, you not only have to develop a product, potentially go to APRA, go and train hundreds of bankers around the country, then still get back to your credit folks and say, this is how we want to do it. By that stage, a non-bank lender's already been writing this for 6-9 months. So that nimbleness is really helpful for non-bank lenders.
Nimble, but is there a concern that there isn't enough regulation in this space?
There's been a lot of reporting of that in the market. In our minds, we've been doing this style of lending at MA Financial for around 5-6 years now. Some of us have got a history that goes well back before that. If you don't understand the space, there is risk. But if you think about like in mortgages alone, there's some people who say, oh, non-banks only do the mortgages that banks don't want to do. But non-banks do things like non-resident loans or foreign borrowers or self-managed superannuation home loans. The banks don't do those. It's not because they're a bad risk, but APRA have said, we don't want you sort of going down that path for different reasons. So the non-banks slip into that space. And our experience is that those loan categories actually perform the same or better than some of the more prime style borrowers that the banks will fund. Certainly the arrears and loss data that we've had over the last 2 years as the macro environment's changed, our performance is generally, for our lenders we provide funding to, is generally online or better than what's reported in the market, say for example through the S&P spin data.
All right, so if you say there's a strong growth coming, where do you see this space in sort of the next 5 to 10 years?
So next 5, okay, that's a long way forward. So what we've been focusing on, you can provide finance around mortgages and there's a lot of demand for that. Certainly autos have been very hot for the last 12, 18 months because a lot of asset-backed lending categories reflect the underlying economy. If you think about there was no vehicles coming into the country, supply chain issues following on from the pandemic. Now you've had a glut of cars come in the country. That needs financing. So there's been a huge growth. So we really need to go with where the market goes. What we've been focusing on is specialty lending, and that is asset-backed lending, but looking at how do we help businesses in particular smooth their cash flows to be able to run their business more efficiently. And it can be through supply chain finance, invoice discounting, insurance premium funding, and other means, asset finance, that enables businesses to be able to seek finance to help their cash flow and help them run their businesses and grow their businesses.